Welcome back. This week I bought more Coupang stock and I'm also watching Booking Holdings stock. So in this video, I'm going to give you a valuation for each one and tell you the price where I'm looking to buy Booking Holdings, and also give you a valuation for Coupang and show you why I chose to buy more of the stock this week, at least part of the reason. This video is going to be a little bit different than some of my other ones. I'm going out of town later today, so there's going to be less editing and things like that. So let me know if you like this kind of style of the video better than some of the other ones that I've done, if you're somebody who watches my other videos. So Booking Holdings is down quite a lot. Here's some of the reasons why. You can see here in this infographic, there's this AI disruption narrative. There's this fear that agentic AI is going to disrupt the Booking Holdings business, and people will use other methods of booking travel accommodations instead of Booking Holdings. They're also expected to see a growth deceleration. You'll see this in the valuation. I've accounted for revenue growth declining in the future. And this is something where, this is part of the reason why I always want to be careful about what I pay for a stock, because we see this time and time again in the market. When growth decelerates, the market will re-rate a stock lower and you'll see it start to trade at a lower multiple. And so that's what we're seeing here, is this multiple contraction happening, where the stock's been selling off. And as a result of that, you're seeing it now trade at a lower forward multiple. And so this is starting to become a bit more interesting to me. So I decided to do a valuation on it. And here is my Booking Holdings valuation. You can see I'm accounting for 12% revenue growth in fiscal year 2026, just over 8% in fiscal year 2027. It seems like the consensus when I did this valuation was that it was going to decline. Revenue growth was going to decline in 2027. And so if that does become the case, I accounted for that going forward. I do believe Booking Holdings is a company with a moat. I don't think that they are ultimately going to be disrupted by AI in the way that some are afraid of, the way that some people are afraid that that's going to happen. I think you need that sort of customer service, and they have a network effects moat that's going to allow them to be just fine. There might be some other companies that enter the space more. People might find other ways to book travel, but I do think they're going to have a moat that's durable enough where they're going to continue to be able to have growth. I think those AI fears are overblown, and so I am factoring in, though, a lower growth rate in 2028, 2029, and 2030 for those fiscal years of 8% each fiscal year. I went with a 20% net income margin, which is pretty close to what they did which is basically what they did in 2025 and 2023 for those fiscal years. And then I decided I would go with a share reduction rate of 3%. If you see growth declining, you're also probably going to see them not necessarily be able to repurchase as much stock or raise the dividend as much. Now, if the stock trades at a lower multiple, maybe they do exceed this 3%, because then they can buy back more stock. But I didn't want to be too aggressive with the buyback, so I went with 3%. You can see the dividends per share and the growth rates that I went with there. And down here, you can see my um, different PE multiples, what the total proceeds would be after fiscal year 2030. And so to get 100% return at a PE ratio of 22.5, which I think is pretty fair for Booking Holdings, maybe even a little conservative, but I don't want to be I don't want to have too aggressive of expectations here. So if they traded at 22.5 after fiscal year 2030, to get a double on my money in 5 years, I'm looking at buying this stock between $3,400 and $3,500. It closed yesterday just over 4,000. So still has a ways to go before I'm going to be interested in buying it, but it's definitely one that I'm starting to get more and more interested in, and that I'm going to be keeping an eye on. If we look at a chart for Booking Holdings, and we look at some pivots here, you can see, and it's down a bit today. Again, market's open. If we look at this chart, you can see there's a weekly support pivot around 33.5381, or at 33.5381. And then you have this is probably going to change before it gets there. We might have new pivots because, it might take it a while to get down to the level where I'm looking to buy it. But right now there is an S5 at 35.0791. So there's some supports there. at those levels where it might make sense for booking to go to that level. If it does, I definitely would be interested in maybe picking up some shares in that area. Now, in terms of Coupang, they've been facing this data breach crisis. If you missed my other video on Coupang, you definitely want to go check that out. Coupang reminds me of this classic Buffett stock. I go into the company more in that video, so I'm not going to do it as much in this video, but go check that other video out. So you can see here, as a part of this data breach, about 33.7 million users had their information exposed. And as a result of that, they're facing potential fines from the South Korean government and basically being rebuked by the South Korean government. And they've had some, this is not the CEO of the US based parent company that resigned, but the CEO of the company in South Korea resigned as a result of this. And the stock's just been really beaten down. If we look here at the chart for that, you can see how the sell-off has just been extreme as a result of this. But when I looked at this week, I said, all right, this company, as I said in the other video, they've got a durable moat. They've got this infrastructure built out. I don't think that they're going anywhere. If you're a longer term investor, I think that this is an opportunity. It's not financial advice as always, but just me personally. So looking at my valuation, if they grow revenue and fiscal year 25 is almost over here, or it is over, they're going to report on it soon. So I did this one a little bit differently. I had expectations for 25 and then also from 26 to 2030 fiscal years. If they grow revenue at 12.78% in 26 and then 12% in 27, 28, 10% in 29 and 8% in 2030, being in South Korea, maybe having a difficult time growing the business overseas as much because of competition that's already in places like China, the United States, etc. Maybe they can't grow the business as much. But they become more of a mature business. Maybe they achieve a 5% net income margin at that point. Now, what I will say is if they're growing faster, they don't need to achieve this net income margin to still get a solid return, because the market will pay a higher multiple for it. But I'm assuming after fiscal year 2030, it's more of a mature business. So I went with these growth rates, some decelerating growth, but a higher net income margin. I said they reduce shares in 26. Maybe it's flat in 27. I'm sorry. I said they don't reduce shares. They actually add 1% to their share count in 26. And then I think this number for 25, I went with the one from the last quarterly report, but I can't 100% confirm that. But let's say they add 1% to their share count. They have started to buy back some shares, but they're still also diluting, obviously, paying people with shares and things like that. So let's say it's flat, share count's flat in 27, and then they start actually reducing their share count in 28, 29, and 2030. So I factored in a 1% decrease in each of those years. They don't pay a dividend, but let's say, they uh, traded at 22.5 PE, and you buy this in the low 18s, you're looking at a double there. If they're growing faster, but the net income margin number is lower, I think the market will still pay a higher multiple than this. Right now, it's had the last close from the 18th there a couple days ago when I did this. Right now, it's trading at 1850. So if we put in 1850 here, okay, you're still looking at about a double out of 22.5. Current-ish price, right? Okay, whatever. So let's say that they you're basically looking at a double if this works out and it's trading at a 22.5. All right. So I just wanted to get some thoughts out on a couple things in the market. Again, if you liked the video, please click the like button, subscribe, click the bell to get notifications. Follow me on X at Stock Sale Flyer. Watch some of my other videos. I really do appreciate it. Thanks, guys. Bye.